Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks on Tuesday, the 21st of October. Before I start, it's just worth giving you a reminder that there's a Zak's Trading Cafe on tonight at 6 p.m. At the Holiday Inn at Regent's Park. So if you're looking for a fun-filled evening, that may be the place to go. On the stock side, we have Bacanora Minerals to start off, and here the main sort of negative was the way that the initial support in the mid to low 60 pence zone gave way quite quickly at the beginning of October. There was a sort of pushback towards the 40 pence level and very oversold RSI readings as well in the teens before the reaction to the upside that we've seen to start the week, an unfilled gap to the upside back within this falling trend channel from July. The view at the moment is that hopefully this is the start of a new bullish phase for the shares, or they will be able to maintain this bounce, especially given the break of this RSI resistance line around the 40 level and the gap to the upside. As long as there's no end of day close back below Monday's 47 pence, 46.9 pence floor, we would be looking for a retest of the 65 to 70 pence area at this July resistance line over the next 4 to 6 weeks as a best case scenario. In fact, at this stage, only really back below the gap floor at 44 pence would be outright negative. Another stock which is a speculative favourite is UK oil and gas, and here we've seen the sharp pullback since the start of the month, key reversal to the downside, and sort of plenty of resistance towards the 1.8 pence zone. Looks like that pullback may finally be petering out. There is decent support from the 200-day moving average, and that's lasted over the last 3 sessions. So 0.87 pence on an end of day close basis looks to be the initial support zone for the shares. That sort of ties in with 0.86, which was the July floor. So really, while we're above, let's say 0.8, which would be the stop loss, there should be a rebound, at least a partial rebound in terms of a recovery in terms of the breakdowns for October so far. If you're cautious on the stock, maybe you'd wait for an end of day close back above the 10-day moving average at 1.1 pence before looking for 1.7 or 1.8 pence again over the course of November. Finishing off with Westminster Group, where there's been, like many small caps, the breakdown for October. The ideal scenario really was that we would have bounced from around the 40 pence mark at the beginning of this month. There was the initial reaction to the upside, but then the failure at the 50-day moving average. The view now is that we're back in basically a broadening triangle formation. Floor of that triangle is at around the 30 pence level, and we've had a couple of decent daily candle days since the rebound off this May support line feature. There's also been a rebound of this RSI support line from May towards the 20 level, which is a very oversold. And normally when you see multiple tests of such RSI lines, that is a lasting rebound scenario. This stage really looking for a retest back towards the upper 40s, perhaps 50 pence over the next couple of weeks. If you're cautious on the shares, maybe wait for an end of day close back above the 20-day moving average of 38 pence before calling the stock higher. The best case scenario here is probably back to 70 pence over the next 2 or 3 months, but obviously that would mean that we would have to clear the 200-day moving average, and as you can see from July, that is a difficult feature to beat. That's it from me. More updates at spreadbetmagazine.com.